How's it going, everyone? It is the investing guy, and today I want to show you guys my portfolio, my dividend portfolio, and I want to show you guys how much I got in total in terms of dividends. Not only dividends, but I also want to show you guys the options premium that I got for the month of July. And we're going to start keeping track of this. I did stop keeping track of my dividends a while ago, so I'm going to continue keeping track of my dividends just because this is my main this is going to be my main focus for my investing going on. So let's check out our dividends first, and then we'll move on to our options premium. All right, so here we go. Our first dividend for the month of July was actually from Coca-Cola, and it was only 12 cents. Then we did get 36 cents from Nike. And don't worry, I'm going to go ahead and add this all up for you guys. I'm not going to go through every single one of them. I'm just going to go ahead and mention some of the bigger ones that we did receive. So we got $6.44 from Jeppy. So that's one of the bigger ones that we did receive on this account. And then we see here, US Bank paid us 39 cents, Store Capital 89 cents. And then we got our RYLD here for $13.55. So this actually seems like it's been stagnant there. I think I have received more from RYLD, even though I keep on adding a little bit more from them. I think we had already received about $15. We all know that the price of RYLD has declined quite a bit. So with that, they are paying less in terms of dividends. Hopefully they do recover, and well, with that, they can pay out those bigger dividends also. So that's my goal there, and why I still continue to add onto my RYLD and QYLD. From the Global X Growth ETF, we got $1.33, and then we have QYLD here with $12.33. We got MFA Financial 81 cents, and I believe that was our last dividend payment for the month of July. So quite a slow month for dividends. Let's go ahead and check out our history with QYLD so you guys can see exactly what's going on here with QYLD, because we are actually receiving less than what we've received in the previous months, even though we keep on adding into our positions for QYLD. We see that in the 1 year they are down quite a bit. They were almost up to $23. Well, I think they did reach $23 at a point. There we go, 23. And right now they're trading at $18.46. So with that decline, yeah, they are paying less in terms of dividends. So you guys see here, I am still continuing to buy QYLD at these low prices. I do think that they will recover, and we do see this pattern a lot with QYLD where they drop, and I do think that during these drops is the best time to purchase QYLD. Hopefully I'm correct, not financial advice, but hopefully I am correct. And yeah, I'm waiting on a nice little bonus, and I'm going to go ahead and make quite a big purchase on QYLD, RYLD, and Jeppy. But here we see the dividend for July, which was $12.33. I want to go ahead and scroll down and see what was our dividend over here. It was $11.36 for the month of June. But if we go down even lower, we do see that the previous month was $11.47, which was actually more than the month after that. Even though I had been adding, you guys can see here that I had been adding to my position, and well, the dividend was also reinvested. Even though I have been adding to my QYLD positions, as you guys see here, yeah, the dividend has stayed quite stagnant. I know that if I hadn't been adding all these shares of QYLD, then we would have received much less in terms of dividend. But I do want to average down. You guys see here, my average price was $21.63. So I do want to bring that down to about $21 just by averaging down at these lower prices. So that's the goal there with QYLD, RYLD, and Jeppy. That's pretty much the same story with all those three. But now I do want to show you guys that my portfolio is doing quite well. So I want to show you guys why exactly. I don't really attribute this to the dividends, and I really do think that this is due to my covered calls and cash secured puts here. They've been doing quite well, and they've been printing quite a bit of money for me. So I do want to go ahead and show you guys some of those covered calls and cash secured puts. For example, we do see that here I got a covered call for Starbucks for $70. This is going to be a very long-term covered call. It's not going to expire till the year 2024, I believe. So since Starbucks is paying me dividends, I do just kind of want to forget about it and play it very safe with Starbucks. So it is a covered call that's very far in the future, and I don't really have to worry about it, and I just collect the dividends from Starbucks. If it does reach, let's say somewhere about 6 months from now, if it does kind of reach my price target of about $100 for Starbucks, then I can easily just roll that on to let's say another year or something like that. But yeah, I'm playing it safe here with Starbucks, and as you guys can see, we did get $70 from that. This month we were quite active with the options, and we did get some smaller ones. For example, we rolled this on over for Lucid, actually to a shorter expiry date. That way I can make more money on the weekly term. This was on a longer period, but I did see the opportunity to bring this down to it's actually going to expire this week, so then I can be making money every single week off of Lucid, whereas I had it kind of long term. It was going to expire sometime in October, and yeah, I kind of brought this back over here, and it is going to expire this week. And it looks like we're pretty good. It's gonna expire, and we'll be good with this one. We've also been playing Polestar quite a bit, and we've been playing it perfectly. Yeah, Polestar has been just printing money for me, so I'm going to continue with Polestar until, well, we acquire Polestar. I do want to acquire Polestar, but I also want to acquire it at a very low price. I'd be happy buying it at around $8.50, and that's what we're playing right now. We're playing the $8.50 for Polestar, and if we get assigned Polestar at $8.50, well, I'll be more than happy to hold 100 shares of Polestar for $8.50. But right now we have made more than $100 off Polestar. So even if we do get Polestar at $8.50, in reality, we're going to be getting it somewhere at around $7.20-ish, which is, yeah, it just gives us a lot of wiggle room for Polestar. So I'm very happy with how Polestar has been going. It's just been printing money for us. And I think this month alone, we made somewhere close to $100 just off Polestar. All right, now one of the positions that I was looking at was Ford, and we can see that in the last week, it just shot up. And I'm a little upset because, well, I was going to get a bonus from my work. Well, I'm still going to get it, but for some reason it got delayed. I was supposed to get this bonus paid last week, and I'm now going to get paid on August 10th, which was a bummer because I was looking at Ford somewhere here, and if they would have paid me in a timely manner, then I would have been, well, so in the green as we see here. Because I was really looking at Ford somewhere around here, and I was just waiting for that paycheck, and it never came through. So yeah, now Ford's all the way over at $15 and something cents. I still want to play Ford, but I think I'm going to play it quite safely. Probably do some cash secured puts on Ford and bring that price down quite a bit. So if we look at some of the trades here that we can do, I'll probably sell some puts that might expire. Let's go for example August 12th. And we can play it somewhere around here. So what I look for is that I get at least a 1% return on my capital every single week, and that would be somewhere around here, right? So playing it at $14.50 seems about right. It gives us about $1 of wiggle room, and if we have to roll it down for the next week, then we always can just roll down if it's getting a little bit too dangerous, right? But yeah, I'm probably going to play Ford for my next position. All right, so this is what we got here for the spreadsheet. Like I told you guys, I stopped recording everything that we were receiving these months here. It just got very hectic with crypto and a lot of things going on. So I kind of forgot about my dividend portfolio. Well, didn't forget about it. I just forgot about calculating all my dividends here. But anyways, this month we did get $39.80 from our dividends. So it was quite a slow month. If you look over here, our last month in the 30s was actually June of the previous year. Actually, July of last year, we did better in terms of dividends. So quite a bummer that we weren't even able to beat last month. But the cool thing is that in terms of options, we were able to make up for this slow month in terms of dividends quite a bit. We had a really good month in terms of options. We played it very safe, and we still made about $208 in terms of options premium. So that's very, very nice there. And so the way that I'm going to calculate this is I'm going to go ahead and calculate the dividends and also the options premium, and then we're going to see how much we end up with every single month. So this month we did end up with $247.80, which was very, very nice. I'm very glad that we got that. And yeah, I'm looking forward to this. We're getting very close to adding a very large position into our portfolio. And once we get that position on here, we're just going to see this option premium just explode all the way up. So I'm very excited to show you guys that. Actually, I'm going to give you guys a little sneak peek right now. So let's go ahead and check it out right now. So we have pretty much 42 shares of Google. So we're 42% of the way there. Like I said, I am going to get a bonus from work, and I am going to purchase, I'm thinking I'm going to purchase about 30 more shares of Google all at once. I am really hoping that we can get it under my average price. I really don't want to, bring my average price up, because I had been working on bringing my average price down below. Again, it's quite a bummer because I was looking at Google over here at 105 and I was like, yes, I'm going to be able to purchase. This was, again, when I was supposed to get my bonus, and it would have been at a perfect time if we see here. But sadly, yeah, I didn't get that bonus. Now I'm going to get it in August 10th. So yeah, quite a bummer that I wasn't able to purchase at these prices. But let's hope that maybe by August 10th it does drop down a little, and we can purchase Google at a nice price. Anything below 114, and I am more than happy to purchase quite a bit of Google there. And why that's going to be so important? Well, let me show you guys this. We're going to be able to sell calls on Google, and this is let's go to the next month here. Let's go to the next week, sorry. And if we look, something safe, Google is at around 115, and I think if we were to play it safe, it'd be somewhere around 118. It would pay us $125 for pretty much a week and a half. So imagine doing this 3-4 times a month. Yeah, our options premium is just going to explode. And the cool thing is that I'm going to be able to use this here to purchase dividend paying stocks. So I'm quite excited to get Google to 100. We'll get there sooner than later, and that's just going to explode. I have a feeling that that's going to explode this portfolio, and it's really going to give us that boost that we need in this portfolio. All right, guys, that's going to be it for this video. I hope that you enjoyed this video. If you did enjoy it, go ahead and smash that like button down below. And if you haven't yet subscribed, what are you waiting for? Smash that subscribe button. And like I like to say, let's go to the moon together, and I'll catch you guys on the next one.